Hello and a very warm welcome. If you're planning a move to the UK for work, listen up, because there is a massive tax update you really need to know about. This guide comes to you from the experts at My Tax Accountant, and we're going to break down the huge changes to Overseas Workday Relief that kick in from April 2025.
So, are you moving to the UK, or maybe you've just landed a new job here? Well, if that's you, you could be on track to pay way more tax than you need to. Why? Because a really powerful tax relief has just been completely transformed. Stick with me, and we'll get you fully up to speed.
All right, so here's what we're going to cover. We'll start with the basics. What even is Overseas Workday Relief? Then we'll look at the old rules versus the new ones. We'll dive into checking if you're eligible, break down the numbers and any costs, and then wrap it all up with your next steps. Simple as that. Okay, let's get right into it. First things first, what on earth is Overseas Workday Relief?
Okay, so in simple terms, Overseas Workday Relief, or OWR as you'll hear it called, is a pretty fantastic tax break. Imagine this, you live in the UK, but your job sends you overseas to work for a few weeks. Well, OWR basically puts a tax-free shield around the money you earn on those specific days. It means you don't pay UK tax on that part of your income. And as you can imagine, for anyone who travels a lot for work, this is an absolute game changer for your bank account.
Now, to really get why these new rules are such a big deal, we've got to take a quick look back at how things used to be. You know, you have to see where we've been to really appreciate where we're going.
Honestly, the old system was, well, it was a bit of a nightmare. It was all tied up with this really complicated idea of being non-domiciled. The bottom line was, you had to keep the money you earned on your work trips in an offshore bank account. The second you brought that cash into the UK, we're talking even just transferring it to pay a bill, bam, it was taxable. It was a massive headache and meant people were juggling all these different bank accounts, just trying not to make one tiny mistake and get hit with a tax.
So yeah, that's the old world in a nutshell. Complicated domicile rules, keeping your money locked away offshore, a real mess. But now let's look at the new way, and you'll see just how much has changed.
All right, get ready for this, because from April 6th, 2025, the government has basically thrown out the old rulebook and started fresh. That whole complicated, frankly ancient system based on domicile, it's gone. In its place, we have something so much simpler and more modern, based on one thing, your tax residence. And here it is. Look at that difference. The link to domicile? Gone. It's all about your resident status now. Having to keep your money offshore? You can forget about that. You can now bring your foreign earnings right here to the UK, tax-free. All those tangled rules have been smoothed out, and you even get an extra year of relief. It's now for your first 4 years in the UK, not 3. The big words here are simplicity and, honestly, freedom.
Okay, this is the big question, right? Who can actually claim this new, much better OWR? The details are super important, so pay close attention. And stay with me, because the main requirement might actually surprise you. So, to get this relief, you need to be what HMRC, that's our tax office, calls a qualifying new resident. It sounds fancy, but it just boils down to a few key things. First, you've got to be a UK tax resident for the year you're claiming. Makes sense. Second, and this is the absolute kicker, you must have been living outside the UK for at least 10 whole tax years back-to-back right before you move here. And finally, you have to actually make the claim or election on your self-assessment tax return. You can't just assume you'll get it. If you tick all those boxes, you can get this relief for up to 4 tax years. Let's make this real with a couple of quick examples.
So, first up, meet Abdul. He's a freelance consultant from Canada, and he lands in the UK in February 2026. Now, he's lived in Canada his whole life, so he's obviously been non-UK resident for way more than 10 years. This makes him a qualifying new resident. Simple. He can claim OWR for the tax year he arrives and for the next 3 years after that. It's a textbook case of eligibility. Okay, now let's look at color. He also moves to the UK in February 2026. But here's the twist. He actually used to live here and only left in April 2020. So if you do the math, that's only 6 tax years of being non-resident. He doesn't meet that crucial 10-year rule, so no OWR for color. And that's not all. Here's where most people go wrong. They forget to check their recent residency history with a fine-tooth comb. That 10-year continuous period just before you arrive, it's non-negotiable.
Okay, so you've figured out you're eligible. Fantastic. The next question that's always on everyone's mind is, how much money are we actually talking about? How much can you save? Well, under the new rules, there is a limit. Let's dive into the numbers.
So, from April 6, 2025, there's a new cap on the block. The absolute maximum amount of foreign income you can get relief on in any single tax year is £300,000. That's the ceiling.
Right, so how do you work out your specific limit for the year? It's pretty simple, actually. You look at two figures. First, you calculate 30% of your qualifying employment income for the year. Then you look at the hard cap, which is £300,000. Your OWR is the lower of those two numbers. So let's say 30% of your income is £100,000. That's your limit for the year. If 30% of your income is, say, £400,000, then you're capped at the £300,000 limit. It's a straightforward check that really only comes into play for the highest earners.
Okay, so OWR sounds pretty amazing, right? But there's a catch. It's not quite a free lunch. There's a trade-off you make when you decide to claim it, and this is something you absolutely need to know before you tick that box on your tax return.
So here's the deal. For any tax year that you claim Overseas Workday Relief, you lose your right to two standard UK tax-free allowances. First, the personal allowance. That's the chunk of your income you normally don't pay any tax on. Second, the capital gains annual exempt amount. That's your tax-free allowance for profits on investments. You give up both for that year. This is why you've got to do the maths. You need to be sure that what you're saving with OWR is actually more than what you're losing by giving up these allowances.
Okay, time for a little pro tip. This is a good one. Instead of paying too much tax through your salary each month and then having to wait until the end of the year to claim it all back, there's a smarter way. Your employer can actually apply to HMRC for something called a Section 690 direction. This basically gives them permission to adjust your monthly payroll tax, your PAYE, to factor in your OWR right from the get-go. It's a fantastic way to see the benefit in your pocket every month, not just once a year.
Phew, we have covered a ton of ground, haven't we? From the dusty old rules to the shiny new system, and all the calculations in between. So let's pull this all together. What are the most important things to remember, and what should you do next?
All right, let's do a quick-fire summary of the absolute must-knows. First, everything changes for OWR from April 6, 2025. Second, it's all about your residency now, not domicile. Third, that 10-year non-residence rule before you arrive is the key to unlocking it. Fourth, you can finally bring your foreign earnings into the UK without a tax penalty. And last but not least, don't forget about the new cap and the fact you'll lose your personal allowances when you claim it. Got it? Good.
Now, before we wrap up, a very important note. The information we've shared today is for general guidance only. UK tax is notoriously tricky, and everyone's personal situation is different. So please do not use this to make your final financial decisions. It is absolutely vital that you speak to a qualified expert who can give you advice based on your specific circumstances.
And speaking of experts, getting this OWR calculation right can make a huge difference to your finances, but a mistake could be really costly. To make sure you get it spot on, we highly recommend getting in touch with the team at My Tax Accountant. They live and breathe this stuff. You can give them a call on 020-8570-8531, or you can just drop them an email at info@mytaxaccountant.co.uk.
And if you want to dig even deeper into all the details, there's a fantastic full guide on the My Tax Accountant blog. You can find it at mytaxaccountant.co.uk/post/overseas workday relief. Thanks so much for watching. And hey, while you're at it, make sure you subscribe to their YouTube channel so you never miss out on important updates like this one. Take care.